Coming your way are two different entrepreneurs. On our right is an entrepreneur who knows accounting. Coming to our left is an entrepreneur who doesn't. We can see that the entrepreneur who doesn't know accounting merely slacks off and play video games. On the other hand, the entrepreneur who knows accounting diligently works and allocates his resources for his business. Come payday, accounting is the system of recording and summarizing business and financial transactions and analyzing, verifying, and reporting the results. This allows easy allocation of resources for the business in order for the business to flow smoothly. Just as the entrepreneur who knew how to do accounting, businesses with good accounting skills often lead to good income. Accounting has been very much around ever since writing systems had developed. Wealthy individuals had scribes keep track of their possessions, be them cattle, grain, gold ornaments, and other common items at the time, to keep records of additions and deletions as to their list as they are being sold or used. This was to guarantee that all these transactions were legitimate. However, the first systemized form of an accounting system, very much similar to our modern accounting, goes to Luca Pacioli. Luca Pacioli is an Italian mathematician who created and introduced the systems of double-entry bookkeeping, or the debit-credit table, which became very popular among Italian merchants during the Renaissance. He described the use of journals and ledgers and made the golden rule that debits equated to credits, with all the assets, liabilities, capital, income, and expenses in factor, allowing a secured business transaction. Over time, business owners were too busy to perform accounting for themselves, but accounting professions, or what we call accountants, weren't present yet before. This led to the profession's origin in Scotland in the 19th century, when Queen Victoria granted a royal charter to the Institute of Accountants. The largest society of accountants still are found in Scotland today. These Scottish accountants then migrated to other parts of the world, including Europe and the United States, and there pioneered the essence of accounting there. Later throughout its development, many institutes and organizations developed together with universal standards and laws governing the study and practice of accounting. And now today, instead of the usual pen and paper accounting formats, technology proves useful, as this gives accountants access to the modern computer and even cloud-based sharing such as the internet to input these transactions and even work at home. There are 5 different functions to accounting that act as steps to the process. First, recording. This is the basic function of accounting, ensuring all transactions are recorded in an orderly manner, declaring how much and to whom and when the transactions were done. Classifying is a systematic analysis of recorded data, grouping transactions and entries to its respective nature, such as whether they be an asset, liability, capital, income, or expense, and what classification of such item. This is often done in our ledgers. Summarizing is gathering all information in an understandable manner, leading to the process of inputting the trial balance and income statements. This is then placed into analysis and interpretations. This is the final function, and the recorded data is analyzed and interpreted to create a meaningful judgment about the business's financial condition, affecting the future interactions. Communication is then made by the accountant to the proper person, often the owner or head of finances, by distributing the accounting reports. So the field of accounting is very much dependent on the businesses it is working for, and many of the business transactions that accountants deal with are then factored by the sources of income of the business, what they can offer. Service businesses provides intangible products, but like its namesake, services. They offer professional skills, expertise, advice, and other similar services, but not a tangible product. These include teaching in schools or repairs in the mechanical shops. The merchandising business, however, buys products at their raw price and resell these products at their retail price. These are the retailers or distributors in the market economy present. Often, they sell their product at a higher expense in order to profit, but never actually changes their products. These are found in the local grocery or convenience stores, which resells all of their products but never actually produce them. There are many other merchandising businesses in the world. The manufacturing businesses uses raw materials to create new products, which then are sold to customers. Manufactured goods can also be sold to the merchandising business, like mentioned. Business can be owned differently, which also may factor to the finance as income are split among these owners and actions are undertaken and overheaded by them, which an accountant works with. A sole proprietorship is a business owned and operated by a single individual. A partnership is owned and operated by two or more people. Lastly, a corporation is owned by a small group of people who manage a whole business. Its assets and liabilities are separated from its owners, but as a whole.